Hi there. We're at Holistic Investment, and I'm your host, Konstantin Kogan, and I'm delighted to have today Spencer Bogart. Hi, Spencer.
Hey, Konstantin.
So Spencer is general partner in Blockchain Capital, a venture firm dedicated to investing exclusively in crypto and blockchain industry. They're probably one of the first venture funds in this space. So we're gonna have an exciting interview today. But before that, traditionally, we have to read a disclaimer. So this content for informational purposes only should not construe any such information or other material as legal, tax, investment, financial, or other advice. So let's get to the weeds and try to understand, Spencer, how did you get to the space? What inspired you and what made you basically go from a successful career? Like, I know that you're licensed, you're a CFA, you've been an analyst, you've done an analytical job in many other firms. So I'm curious, what inspired you to join crypto?
Yeah, sure. So let me go back to a little before crypto. Coming out of university, I started at a buy-side investment firm, so a fund of hedge funds, a small one based in San Francisco. And really my job there was essentially as a glorified intern, and I was reviewing a lot of the research from the hedge funds that we were investing in. And I had to be the most fascinating research I could possibly read. And I couldn't believe that people actually made a living studying these things and being able to get such fascinating research. And so from there, I really pursued in earnest a career in investing more broadly. So headed down the CFA track, so ending my CFA charter. That took a few years. And then along the way, I actually landed at a FinTech startup called ETF.com. It was the first of its kind firm kind of building an ETF analytics tool. So at the time, obviously we've seen this massive rise in exchange traded funds, really displacing a lot of the assets in mutual funds. But everyone was kind of analyzing these ETFs the same way they were mutual funds, but in reality, you have to look at them through a slightly different lens. Mutual fund lens is helpful, but there's a lot of additional information that's really helpful for, I think, an investor that's considering one of these. And so that firm was actually ultimately acquired by FactSet, but part of the team that helped build product as an analyst and help figure out, okay, how do we make people make sense of ETFs, provide the best exposure to the things they're trying to get exposure to. And so part of that was always having a morning research call where we'd sit and we'd go through all of the news that was kind of out there from a macro landscape standpoint, and then tying that back to particular ETFs. So if there was suddenly a shock in oil price and how that was affecting oil exchange-traded products, exchange-traded funds. And in one of those conversations, we would also talk about exchange and things like this. And someone mentioned, oh, by the way, today Bitcoin hit parity with the dollar. So the price of Bitcoin had hit $1. That was the first time I personally had ever heard of Bitcoin. And so a couple people in the room started bouncing off, oh yeah, Bitcoin this, Bitcoin that. And I said, I can't believe that this is a real thing that exists and that I don't know more about it. So that started my journey down the rabbit hole. I just found it fascinating. Started actually trying to buy very small amounts of Bitcoin, not so much as an investment, but really just to figure out if it worked. So obviously now wish that, had turned those into serious investments. But at the time it was really just, okay, this thing's probably not going to work, but hey, while it is working, let's go ahead and check it out and try it. And so I can actually remember going down to a small venue in Chinatown in San Francisco and wiring money, I think via MoneyGram to Mt. Gox, and purchasing a small amount of Bitcoin and then waiting to transfer that out. And so it was just a fascinating experience. I remember actually going into that venue in Chinatown, and the guy at the counter that was helping me had very broken English, and he was really trying to discourage me from doing it. He was like, no, this is a scam. Like, definitely do not send this money. I was like, look, it's a small amount. It might be a scam. I don't know, but it's okay. Just send the money. He said, fine. Okay, let's do it.
Do you happen to remember the year?
That would have been, whenever it hit parity with the dollar was when I first, it hit parity with the dollar, but then I didn't purchase it until it was probably around $50. And then it had a subsequent big run up there. But I mean, again, we're talking small amounts. This wasn't,
I think it's around 2012 and 13 then, I guess that's right. Somewhere around.
Exactly. So I think the learning curve started in 2012, buying very little amounts to use it in 2013. Think, okay, this is cool. It's probably not going to work, but it's really interesting. What a fun experiment. That's great. And so, obviously was holding small amounts during the time we had the rise of the Silk Road, and we saw this massive run up in price. It's like, wow, I can't believe this thing continues to work. And then we saw the Silk Road shut down, Mt. Gox went bust, and I kind of took a little bit of a backseat, said, okay, well, that was fun. I'm glad I did it. It's probably going to die now. Honestly, like I wish I was one of the, there were so many people that were forward leaning in the space and understood that this was not going to be the death of Bitcoin. I wish I could say I was one of those people, but I thought, this is probably the end of Bitcoin. And so really, continued to follow it a little bit, but it wasn't until maybe about 18 months later, I was shocked that it died, right? It was still working. And so that's when I started to dig a little bit deeper and understand a little bit more of like, how could something survive a shock this big, and how does it still continue to function? And that was when I really started to get actually tremendously constructive, because I'm looking at the network and I realized not only has it not died, there's actually more people transacting on here, there's more volume flowing over the network, and there's more users than ever. And so to me, that was a real demonstration of staying power and resilience, right? It was, okay, this is something that's actually not going to go away. I mean, if you can survive that kind of a shock, we're in for a much longer road here, right? So that set me down a further path of, okay, let's continue to just learn more. Let's do this as a little side hobby. I spent a lot of time going to actually meetups in San Francisco, where actually there was a lot of Bitcoin core developers there that would give presentations. It was such a small community at the time that I mostly just kind of sat in back and asked a few questions and talked to people, and just really got enthused with just the community built around it and how much value people saw in something like Bitcoin from different angles, right? You had people, whenever I talked to someone, they kind of approached it from a different side. And that was also really fascinating to me. But again, at this point, it was still kind of, okay, it's an interesting experiment. It's a hobby. Okay, fun. That's fine. And then it wasn't until, let's see, so after I left ETF.com, I actually went to Wall Street to work for a mid-sized investment bank called Needham Company. And so I joined there writing sell-side equity research, which means that you have maybe a dozen different companies that you're covering, which means you're following their earnings reports, you're doing channel checks, you're trying to write research on what's happening with these companies. And so the sector that I was covering was SaaS and internet. So companies like Salesforce and LinkedIn, which in theory are the fastest growing, most disruptive companies in the world. And so I really enjoyed it. But on the side, I was also watching everything that was happening in what we'd call the blockchain space at the time. We'd probably call the crypto space today. And I was just shocked at, okay, what's happening over here is so much more disruptive, so much more powerful, and it's evolving so much faster that, it's making these big publicly traded software and internet companies feel like, honestly, like snooze fests in comparison, right? They seem boring in comparison. And then by 2016, I started to realize that, the industry was actually gaining momentum. You're starting to see actual serious capital formation into a lot of the companies. And I realized when I looked around at my peers on Wall Street, nobody had any idea what was going on. And so typically, coming from that kind of a Wall Street mindset, typically the kind of thing you would do if you want to get well briefed on something like this is you'd go and open up an industry report that would kind of lay out, okay, here's the industry, here's the technology behind it, here's the key players, here's some of the companies we expect to be impacted, here's some of the key investors, and I couldn't find anything. So I was like, okay, you know what? Just as a fun side hobby, I love writing research. I love all the stuff that's happening in crypto. I'm going to go ahead and put together an industry report just for myself. It'll just be a fun exercise. And in doing so, I actually shared that with one of my colleagues just of, hey, what do you think about what's happening in the space? And I'm very fortunate that, actually at Needham Company, they were really supportive. So someone picked that up and said, wait, this is really interesting stuff. We should go ahead and lean into this technology. We should go ahead and publish research on it. Why don't, instead of you just writing this for yourself, my real plan was to just drop it on Reddit at the time. Like today, we have crypto Twitter, we have all these different venues, Telegram, where people communicate. The time it was really just Reddit, our Bitcoin, the Bitcoin subreddit. And so I thought, okay, I'll just release it anonymously on there. Since I have a separate job, I don't want to tie my name to it or anything. But again, it was encouragement for some from some colleagues that said, no, let's go ahead and let's put your name on this and let's publish it on Wall Street here. I said, okay, that's great, let's do it. And so went ahead and did that. It was Wall Street's first industry report. And then from there kind of segued into actually covering Bitcoin as an investment. So actually started putting out like, okay, let's think about like what the potential future price of Bitcoin might be. Let's talk about some price targets. Let's talk about some of the fundamentals in the network going on here. And so actually in doing a lot of that research, I actually owe a big thanks to Michael Sonnenschein over at Grayscale, because in order to cover something like Bitcoin on Wall Street, you need to tie it to something that's publicly traded. And so GBTC was that vehicle, right? And so he was very encouraging of like, listen, you understand what's happening here. Nobody else is really covering this. There was one person who had published one research report on it, which was Gil Luria down at Wedbush. And so he was really encouraging of like, let's go out and let's go publish some more research here. Obviously, Grayscale has become a behemoth since then. But I can remember at the time, Michael and I would go around and when we'd host our big conferences for Needham Company, we'd try to get investors interested. Maybe you guys can allocate to GBTC. And it was tough to get meetings. I mean, he fought a hard battle, and now obviously Grayscale is a massive asset management company. So, huge kudos to him and huge appreciation for, his role in helping drag me into the space. But by late 2016, it occurred to me that things were moving so fast, what was happening, that there was no way to do well in the space by spending part of your time on it. Like I couldn't split my time covering Salesforce and LinkedIn and then spend my other half of my time paying attention to what was happening in the blockchain space. So I really had this itch. I was going around telling everyone, I feel like there's a tsunami or a tidal wave coming at us and like nobody's paying attention. And so, really had to go, everyone hits that point where they're so deep down the rabbit hole, they feel like they need to go full crypto. And so I hit that point in late 2016. As part of doing a lot of the research, I'd gotten to know various of the investors, various of the companies in the space. And part of that was getting to know the guys over at Blockchain Capital. So my two partners, Bart and Brad. And so when I let them know, hey, guess what, guys, I'm leaving Wall Street. I'm going full crypto. Don't know exactly what I'm going to do yet. They said, look no further. Let's figure out what we're going to do here. And so it was a really natural home. It's been a great partnership. And really thankful again to so many people that have been supportive along the way. And certainly Bart and Brad have been a huge component of that. And so, yes, so I kind of came in and originally at the time, for a long time, because it was really just four of us at the time. So it was Bart and Brad. And then we had Joanne Lauer, who was leading our operations department. So it's really the fourth member of the team there at the time.
Wow, that's an impressive story. I guess there were some turning points starting from Silk Road and Mt. Gox, and then there's another turning point when you actually started to publish your reports, right? And I think it's impressive. That's one of them first. I didn't know that you published one of the first reports on Wall Street. That's impressive. So I'll try to find it, by the way. If you can send me a link, that would be fascinating to take a look, right?
Yeah, I'll send you a link. The funny thing is one of the great things about doing sell-side equity research is you kind of blast it out to a large institutional investor base, and people like to call you and talk about, either they're really excited about what you're doing or they think you're way off the mark. And so talking about Bitcoin in 2015, 2016, obviously I got a lot of calls, people saying you're crazy, you've lost the plot here. But that was really helpful because honestly, the most valuable thing for anybody that's trying to be a serious investor is you need lots of competing theses. You need people providing a lot of tough feedback. And so it was really, really constructive for me for kind of hardening what is the thesis around Bitcoin. So really a great place to be for that time.
No, I'm sure it's impressive. And since then, I guess being one of the leading investors in the crypto space, because just for someone who is not familiar with blockchain capital, some of the highlights, 90 plus portfolio companies in 300 mil in asset under management. We have instead of 4, you have 9 dedicated investment professionals. You have I think you're open a 5th fund to date, if I'm not mistaken, and you have 5 unicorn investments. So I think that's already impressive. Oh, I forgot another important metric, first tokenized fund in the world, probably. So a VC fund. So all of those things, we're going to talk about them, like, specifically, because I guess, I think right now you feel that was the right choice, right? So the resilience you presented back in the days, like now they paid out, right?
Yeah. 100%. Definitely at first it was, okay, let's go ahead and jump in head first. And, I expect that my career options will be fairly limited in comparison to just pursuing the Wall Street path. But I was so passionate and interested in it that, it's the interest subsidizes any decreased career opportunity. Now, obviously, since then, the industry has really blossomed and that's not really the case anymore. But at the time, it certainly felt like, we're in for a really long, slow grind for Bitcoin over 10 years, and certainly didn't expect what happened in 2017 to materialize so quickly.
No, so let's focus on some of your great investments. Like,
Sure.
First of all, I want to define, like, one of the leading investors. How would you, I would say, try to explain the difference in your approach of due diligence and vetting any project? If you would compare, like you mentioned, you wrote reports about Salesforce, LinkedIn, obviously it's more traditional business model, as opposed to something that has tokenomics and completely different, like, ways how you approach the value and the price and all the movements, the volatility. There's a lot of different, like, metrics, right? So can you help to understand, like, what is your due diligence process?
Yeah, sure. Before I dive into that, a little bit of background that's probably helpful here is, when the firm was founded in 2013 by Bart, Brad, and Brock, it was, Bart and Brad were really looking for a venture firm to go and invest in, actually, and realized that there was no dedicated venture fund. There were a few hedge funds, there were a few vehicles that held Bitcoin, but they said, okay, fine. If there's not anybody that already has one, why don't we go ahead and start it? And they were smart enough to go ahead and start the first fund that really was a lot of the industry founders and CEOs, which was a really smart move, because then you had a lot of the industry founders and CEOs, and the pitch to them was really like, look, what if you're in the right place at the right time, but what if your company just doesn't end up being the rocket ship? So what if, like, your whole thesis about building in the space is right, but your company fails, which happens all the time with startups, right? So why don't we help you diversify your exposure a little bit here so that, if the industry grows, which obviously it has, you'll have exposure to that. So always from the beginning, we have had a very much a venture mindset as opposed to a hedge fund strategy. So there's obviously been a lot of hedge funds that have popped up in the meantime. I think there's absolutely a place for them in the market. It's just not what we do, right? Like, we are long-term investors, and we see that as a significant strategic advantage. The biggest of which is, so my two partners, Bart and Brad, had run a micro cap hedge fund before founding Blockchain Capital. And one of the biggest learning lessons for them was that, listen, people always want to contribute more capital to your fund when prices are really, really high, when you're least inclined to buy more things. And everyone wants to pull their capital from your fund when, you have bargain deals and amazing prices out there, right? So you're really, even though you would like to invest counter-cyclically, you're constrained by the structure of your vehicle, right? And so we've intentionally, we've had so many conversations over the years of, should we launch a hedge fund? And we always come back to that same thesis, which is, listen, when we have a venture fund with long-term capital and long-term alignment, it allows us to deploy that capital counter-cyclically, right? So when other people are, in 2018 getting washed out of the market and we have a lot of forced sellers, we can actually call capital from our limited partners and deploy into that bear market. So a very favorable kind of structure. Obviously, venture funds are harder to raise because you're asking your limited partners to lock up their capital for a really extended period of time. But we've been fortunate to have a lot of just phenomenal backers that really have conviction in the space.
But as far as I ask, you have 8 years? Are you looking up for 8 years typically?
Yeah, exactly. So it could be 8 to 10 years. Or typically it's 8, and then you have 2 possible 1-year extensions. So it could go up to 10 years. But yeah, exactly. So it's, you need to have a lot of long-term conviction in the space. And especially in the very early years, there were very few people that were willing to lock up capital for 8 years to invest in a new technology, right? Fortunately, there were a few, and we've been able to kind of grow the size of the funds over time. But it's been great. I mean, at the end of the day, again, it all comes back to this venture strategy. So deploying venture capital into the blockchain space is not so different than deploying venture capital into other industries. Obviously, over the past few years, it's looked a little bit differently as we have a lot more digital assets involved as opposed to just traditional equity investments. But overall, it's the same kind of thesis, right? We're looking for especially really strong founders, because we're investing at the early stage. So, we're technically industry specific, so blockchain specific, stage agnostic, meaning we'll invest at any stage, but really our bread and butter is seed and Series A. And that's really because it's where we can add the most value to any company we work with, right? We can help tie them in. We have a full regulatory affairs practice. We have a full business development practice. It's where we can really work with a founder and help get them their first 3 customers, right? Which is really critical at that seed stage. And so, again, it really, when you're investing at a seed stage, even Series A, you really have to be founder focused, just because, inevitably startups get hard and people have to pivot, they have to shift directions. And, just investing in the first product that they're launching it tends to be not as much of a winning strategy as a founder that can continue to release products that the market wants, right? So that's certainly been our biggest focus.
No, I appreciate you sharing that, and that's actually brings to the next question. So you have 5 unicorns, right? Which is impressive for, I would say, relatively young venture firm. Like, you don't have more than a decade experiences. Like you didn't, like, some of your lockups are not even completely finished in the first fund 1, right? So. But still, yeah, you were successful in identifying those promising companies and understand their thesis, understand that that's the next big thing. So first, if you're comfortable talking about a few of them, if you want to name them, and also I want to understand your approach. How would you actually act? It's not about feelings, it's about metrics, right? It's about rational, very strategic, pragmatic approach. How would you understand that that's potentially not, there's no promise, obviously the startup can fail, right? But how would you identify that a unicorn?
Yeah, sure. So let's see. So yeah, it's always hard with some equity investments of exactly what is and isn't a unicorn, depending on when they've last raised capital and all of this. But the 2 most notable that stand out are really Coinbase and Kraken. And Kraken, one that we actually invested in at the seed stage. I wish I could take credit for that, but that was actually an investment done before my time. But in general, it resonates or is similar to a lot of the investments that we've made over the past several years, which is really thinking about onboarding companies, right? So when we think about this new technology, we think about people onboarding onto these public blockchain networks, right? We're really looking for investments that are companies that are able to capitalize on that onboarding, right? And so if we go back to kind of an internet analogy here, the first wave of internet investments, the first wave of successful internet companies are really ISPs, right? Because they're sitting there and they're taking a toll as people onboard to the internet, right? And so once you have people online, there's a lot of other business models that emerge, right? We get Google, we get Facebook, we get everything else. But in the early days, you're looking at AOL, right? As one of the best internet companies. And so similarly, we look at something like Kraken and Coinbase in a very similar fashion, right? These are the companies that are helping people move their capital onto these open networks, and they get to take a toll as they go by. So, thinking about custodians, thinking about exchanges, that's been a huge, huge theme for us over the past several years. And I think it will continue to be one for the next few years, because even at a generous assumption, we're talking very, very small single digits of the global population and of total capital that's onboarded into these open networks. So that'll continue to be a big investment theme for us going forward. But the flip side is also that now we've hit kind of a critical mass. There's kind of an escape velocity in terms of the number of users and the amount of capital on these networks. So you can actually start to see more products and services built on top of them. I think that's a lot of what we're seeing in kind of DeFi today and some other opportunities built around the space.
So if you were to identify, so that's understandable. That's closer to the theory of economy of scale, right? You need first layers, first entry points, how to even scale any product, and of course exchanges, which is Kraken and Coinbase, which, to me, the statistic was staggering when I understood that they onboarded 25 million users, in a few years, the same amount that Charles Schwab couldn't do for it took them 30 plus years. I understood, wow, that's a real result. Yeah. And it's similar to Binance. You remember the statistics when they publish their reports when we've seen that they made more revenue than Deutsche Bank, one of the oldest institutions in Europe. So that's when you understand it's no longer just games, like, and all those questions about, oh, do we have institutional adoption, or we don't, like, you don't have those questions. Like, it's very clear that we do. And the question is, like, how will you identify the next big thing, right? So coming back to probably like your strategy right now, right? So first of all, like, very practical example, like, in the COVID time, I think a lot of people who are watching, they're interested, are you doing investments right now? Or like, if you can talk about a little bit about your latest investments. And then I'm going to ask you some, like, the next question as well relative to that.
Yeah, sure. So absolutely. So, again, we've invested in a lot of the major exchanges, thinking of them as critical onboarding companies like ISPs, thinking about custodians in a very similar respect, especially as institutional capital pours in, they need a custodian, and really thinking about, deposits as a KPI, right? So if I am the custodian that is holding these, there's a lot of products and services that I can layer on top. So obviously there's been, a lot of discussion about this kind of emerging prime broker stack. Clearly we're seeing a lot of the exchanges and custodians move towards that model. But really, I think that we're going to see a lot of new emerging opportunities kind of built on top of that deposit base as well. I think that some of what we're seeing in DeFi today is kind of an example, right? So, there's all these new global financial applications that are launching. Well, if you're custodying your funds with me and I'm Anchorage or I'm BitGo or I'm Coinbase, I have a great opportunity to say, hey, if you want to go ahead and check out this product or service in DeFi, which again, some of that might be a couple years out before they're ready to do that, they're very well positioned to offer those kind of services. So absolutely a compelling kind of theme going forward. But the other kind of thing I tie a lot of this to is thinking about horizontal exposure to some of these things. So, in 2017 and 2018, we saw a lot of fundraising for new layer one blockchains. Many of them had, really astronomical valuations. We tended to kind of stay away from those and said, what, it's really difficult to say exactly which ones are going to succeed, because people are making the mistake of thinking about them only from a technical mindset, right? Only thinking, okay, this new blockchain has technical superiority over another one, and not understanding that, sure, it might, but there's network effects, there's a track record, and all of these things are actually really, really important. And so because of that, it's hard to tell. You can't just look at tech alone and say that this blockchain is going to be successful. And that was a mistake I think a lot of investors made in 2017. We were able to avoid that and said, what, let's look for horizontal investments that have exposure to that. So a good example would be something like Bison Trails. So we stepped in and led Bison Trails Series A, and they're very well positioned to make sure that if any of these new proof of stake blockchains succeed, that they will benefit from that, right? So we take a little bit, of a better risk reward kind of investment in terms of saying, listen, regardless of who is successful here, we don't need to go up and pay multi-billion-dollar valuations to invest in a new blockchain. Why don't we invest in the company that's selling the picks and shovels that has exposure to all of them? And so that's kind of been a similar theme we've seen across a number of spaces. Another good example of that would be the NFT space, right? So non-fungible tokens, digital collectibles. We looked at a lot of these. We saw a lot of games coming out. We saw a lot of really interesting projects that we really, were tempted to invest in. We said, you know what? Why don't we instead go invest in OpenSea, which is kind of the eBay, if you will, of NFTs, of digital collectibles. Because if any of them succeed, a huge part of the value proposition is that people can buy and sell these things with one another. And so why don't we invest in the venue that's going to facilitate that? And OpenSea's obviously been doing a great job in the space so far. That's a lot of how we think about it, thinking about what has the best risk reward and provides that horizontal exposure.
So now, are you focusing right now more on the DeFi projects, or it's still like, like a wide range of different, opportunities, like, gaming, identity, infrastructure, open finance, like, I guess protocols like the layer one solution are not, like, right now, not a hot topic anymore, because how many protocols do we need, right? So I'm just curious to see, like, also, what is your focus right now at the moment, specifically in 2020, and maybe, you have a vision towards, early 2021.
Yeah, sure. I mean, look, obviously DeFi is a huge focus. When I first joined the firm in very early 2017, the very first blog post I wrote kind of announcing it was like, look, we need to take a look at Bitcoin, Ethereum, in this parallel world of crypto finance, right? So at the time I was calling it crypto finance instead of DeFi. and really thinking about like, okay, the fact that people can just build these things and iterate really quickly is going to be a fascinating dynamic. Now, we expected some of that would play out actually a little bit quicker. So it's one of these things where people look at DeFi today and they're like, wow, this all happened so fast. In reality, we invested in a lot of the version 1 protocols for DeFi. So things like 0x, investing in Radar Relay, the very first relayer built on top of 0x, investing in Bancor, which was the first AMM. And a lot of those have really been superseded here in 2019 last year and here in 2020 by, the version 2, version 3 kind of counterparts of those. And so, it's one of these things where it looks like an overnight success, but really, the industry's been building towards this for a really long time. But it's really useful to make a lot of those investments because it helped us understand what are some of the opportunities, what are the strengths of the technology for building these applications, and what are some of the weaknesses, right? So that really helped us appreciate, okay, there is a huge amount of opportunity here, but there's also some serious challenges in terms of scalability, front running, et cetera. A lot of limitations. So really helped us develop that appreciation. Certainly here in 2020, we've been absolutely fascinated by everything happening in DeFi. It's something where, I think traditional investment firms, have a investment committee meeting once a week. In our industry, that's completely not suitable. So we actually do mini investment committee meetings every single morning to make sure that we're following what's going on out there.
So you want to say you have, if you just think about it, like you have 90 companies in your portfolio, right? If you were going to do like, even like mini, like micro, like, 1 minute meetings, like it's still 90 minutes. so I guess like it's obviously not with every company. But also to your point, like, and I'm also excited, the previous interview we had with Jake Brooklyn, like a coin fund, he's also like a prominent investor and his fund is doing great. And they're like, he's really, really good in technical side of things. Like, so we discuss all those NFT AMMs and all the next layers. And his theory is basically that there's no longer like, layers. There's only one, there's no dApps. There's just one thing right now. There's building a completely new economy, right? So, and automated and decentralized, and that's fascinating. And I'm sure like there are other things we can discuss, but because I want to also touch point on certain like I would say history of yours, and which is quite fascinating as well. We mentioned that you basically tokenized the first venture capital firm. And I happen to know like you've invested in Securitize, who helped you to do that. I'm familiar, quite know like Carlos and Jamie. They're great people, and I highly respect the project. So really quickly, because I know I'm sure it was challenging at a certain point, right? But what would be like right now? Fast forward 2020, right? You have a certain experience of a tokenized fund. What would be the major pros and cons to do that?
Let's see. I mean, the major pros are in terms of access. So, we were able to raise, we kept the fund very small because we recognized that like this is the first of its kind. There was clearly demand to do a much larger fund, but we intentionally wanted to keep it small, make sure that we, don't take too much risk on something like this. So the pro was really that we were able to open it up to a much broader base internationally. So we're able to take in much smaller check sizes where normally processing and maintaining those would be so burdensome that it wouldn't be economically efficient, right? And I forget what the actual numbers are. I used to know them off the top of my head at the time, but a very large number of relatively small investors internationally that normally wouldn't have access to a Silicon Valley venture fund. So to me, that was really cool. That was really putting if blockchain technology is going to disrupt venture capital, like we better be part of that story. Also, part of the pros are that, obviously there's very little liquidity in any kind of a venture fund. I mean, we talked about that at the outset, right? That typically your capital is locked up. So today being able to have any kind of liquidity around that, even if it's somewhat limited, is a significant step function improvement from no liquidity, right? I mean, the bar is no liquidity. So if you can get any kind of liquidity, that's an improvement. And so from there, we're trying to figure out how do we, make these markets more efficient, working with the Securitize team on things like that. And so, that's part of the challenge, is also just making sure that we're applying securities laws written in 1933 and 1940 and trying to make sure that everything we do there abides to the spirit and the letter of those regulations. And so, that's absolutely a con in some ways, but it's also, an emergent challenge and something that, Securitize has built a whole business off figuring out how to solve those problems.
Yeah, and I know that you were listed in Open Finance, right? So just to recap a little bit, the entire idea that the fund was based on the NAV of the underlying blockchain capital assets, so that specifically your investments, right? So you would essentially calculate the NAV, and that would constitute, we cannot say the price because it's going to be almost like a solicitation of securities. So we're not doing that, but I mean, it's a public information, so anyone can look up the underlying portfolio. I can see the percentage, what's constructing the portfolio and see the price movements, right? So I think as an experiment, I know that not all the experiments they should be necessarily successful, right? But I really respect you because it was a bold move, and it's always good to be first somewhere, like you mentioned. You were basically first to publish the report. You were in the I was also in the first fund of funds in the crypto space, right? And you guys, you actually, the first fund, if I'm not mistaken, you were registered in 2013 even, right? As a blockchain capital as a fund. That's definitely one of the first 30 or 40 funds in the world, not just literally like in the United States, but in the world. So that's also impressive. It's pioneers, so to speak, or how the industry jargon as a kind of crypto OGs.
Yeah, no, exactly. A couple of funny things about that. So, so for one, I wish I could take credit for, the whole initiative to kind of tokenize a venture fund, do this. To be honest, I was actually one of the people that was a little bit concerned about jumping in and trying this, right? So it was really my two partners, Bart and Brad, that were really pushing forward on it. And we're really like, no, listen, we can actually do something really interesting here and we should do it. And I was, I had just joined the firm. I was a little bit more of, hey, let's slow down, this whole, people doing these digital, this is all new. Why don't we just wait a while and see what happens? So I wish another one of those things that I wish I could take credit for, but honestly, it's really, credit goes to my two partners. And the other funny thing is, you're right, that the firm started in 2013. It was not originally called Blockchain Capital. It was called Cryptocurrency Partners. But eventually changed the name to Blockchain Capital because cryptocurrency became too scary of a term and a name for people. So said, okay, this was, especially in the time when everyone said, okay, I'm okay with blockchain, but I don't know about Bitcoin, right? Said, okay, fine. Why don't we, instead of calling ourselves Cryptocurrency Partners, let's call ourselves Blockchain Capital. And that made things, much easier conversations. Yeah,
I'm sure. I mean, SEC was very, very interested in every firm that has any crypto or cryptocurrency in it. That was a very smart move. I know several major VC firms who actually renamed their companies, just because of this aspect, right? So it's also good to know for the people who were not back in the days in the industry, right? And even now, I don't think it's still so popular to associate with directly with crypto. It's more about technology and the next layers. So there is another question, because of your ETF background, I cannot stop myself but ask you about, the Bitcoin ETF, because we've seen multiple efforts from CBRE, from other reputable firms, so I mean, and it's still going back and forth, we don't see exactly what's happening, it's been postponed every time. And I guess there was a promise that in the mid-September, VanEck and Solidex, they will have some kind of reply from SEC. But again, with the COVID, most likely it will be postponed again. So I'm just curious, what is your opinion on the potential approval of the Bitcoin ETF?
I think it'll happen. It's really unclear to me on the timing. So yeah, absolutely. It's one of these things I've been following since, actually back when I was at Needham Company, was talking about, okay, this prospective ETF, what would this mean? It would certainly open it up because while GBTC has been the best product available, it doesn't function like a proper ETF, and hence the reason why it trades at massive premiums. And that's pretty discouraging for actual institutional capital that might be interested in getting exposure, right? They want something more like GLD, which is a ETF that holds gold, that trades very much in line with the value of its actual net NAV. So, how long it'll take is kind of anybody's guess. If there were to be a changing of the guard at the SEC, like potentially maybe a new team coming in would be more friendly to it. But, that's beyond my scope of trying to anticipate. But in the meantime, realizing for us that, listen, there are investors that do want exposure in these kind of wrappers, and Grayscale is certainly a demonstration of that. We saw an opportunity for, someone to build a full firm around this. And so we invested in a company called Bitwise that many people have become familiar with over time. Actually, their head of research was my former boss at ETF.com, so small world. And when I met the two founders, Hunter and Hong, I said, okay, wait a minute. If you guys are going to go into the world of indexing and ETFs, like you need to meet Matt. You need to meet Matt Hogan. So he's their head of research. So introduced them, and then he said, you know what? I'm really on board with what you guys are doing here. I think there's a great opportunity to create really thoughtful indexes around the space that help investors capture the returns of the space without having to think about which assets do I hold? Do I need to rotate out of this asset into that asset? And so that team has obviously just done a phenomenal job of, briefing regulators, building phenomenal indices, and I think really helping level up the whole industry on that side of the business.
No, I agree. There's a lot of groups who are working really hard to educate regulators, and I respect them for them. And for that, we have even regulators who are pretty open-minded, and one of the commissioners from SEC who has their peers, we call her crypto mom, right? As you know, which is just hilarious. And she's really open. They're doing a lot of briefings. They have yearly annual meetings with all the leaders and in Washington to just really do a lot of education. And she does a lot of interviews as well. And comes to conferences as SEC commissioner. They visited a lot of crypto conferences as well. So I think there is a kind of cooperation, and just also to sway a little bit of negativity around the everything is not regulated. It is actually, and it's more regulated than ever. So you're more positive that it's going to happen. It's a matter of time, if I understand that right. And it's more about we already have insurance products. We already have regulated custodians. So I think we have almost everything. And plus, to me, what was mind-boggling, if we already have futures, which if you think about it from the regulatory standpoint, they're very, very similar in how you perceive the synthetic, formation of an asset, right? And so I wouldn't think so, because I remember one post when they were actually criticizing a lot, people, why you're not approving ETF, because we already have futures. And they were saying, if you're gonna complain all the time, we're gonna also disapprove futures. That was. And it makes sense, because right now we have already things that are approved, and we have a lot of I would say knowledge base. At the same time, I want to ask you what's more of I would say personal question. How do you also I'm sure you've heard this negative I would say outlook in this, right? That once you're introducing more additional layers, something like ETF, right, then the entire philosophical thesis of owning something on your a Bitcoin, and actually transacting in a decentralized world, it's being almost annihilated. So what would you reply to people who are thinking in this fashion?
Yeah, I think it's not either or. And, to be honest, that conversation, as you know, is not new to something like Bitcoin or crypto more broadly. This is a conversation that gold bugs have been having for a long time, right? There's certainly a concern among many gold bugs that if you do not physically hold your gold, then there's almost no value in it, right? The reality is that there's people that want to own gold for different reasons, right? Some people want to hold it because they think that, there's going to be some sort of disaster because of the debasement of money, and they really want to hold it physically, and they want to have it in their own custody. And there's other people that just say, listen, I think based on some of the events I see on the horizon that the price of gold will do well. I don't want to take the burden of actually taking gold bars into my basement or burying them in my backyard. I just want price exposure for some period of time, right? So I think it's not an either or. I think there's a place for both. And I think that's one of the great things is that you have the optionality. If you want to hold it yourself, you can. And if you just want price exposure for some period of time, then you can do that as well.
Yeah, well, the biggest criticism in this context was that the price manipulation can increase. Like, the future market right now is very like relatively small, so it's hard to manipulate the market. But once the positive side that with the approval of the ETF, we're gonna see like completely new money entering the market. I think that's inevitable. But that's also a risk in terms of the price manipulation can increase, because imagine like a large institution, multi-billion-dollar institution will join the game, and with the leverage, they will be able to essentially like pretty well manipulate the price, like not like huge spikes, but like at some point, right? So, what would you reply to this type of concern? Yeah.
Yeah, you know what? I wish I was a better expert on market structure and some of these things. It's certainly something where I've followed a lot of the allegations, right? Like I've watched a lot of the obvious times when that has happened, right? With like LIBOR rigging and things like this. It's unclear to me, to be honest, of like how much of a threat that really is. At the end of the day, there are, as much as I don't want to rely on regulators for something like this, participants that are doing that kind of manipulation in such a way, like via futures or an ETF, playing a pretty risky game in terms of, being caught. So to me, I'm not particularly concerned about it, but I certainly can't write it off as something that is impossible or that nobody could do. I mean, if LIBOR can be rigged and we can see, any number of these things kind of be manipulated, even like the world's deepest assets, then, I have to leave the door open to that being a possibility. But it's certainly not something that keeps me up at night.
Yeah, no, I appreciate your outlook. I think it's important just to acknowledge that this risk, it exists, and then but we don't have a lot of tools to mitigate it, right? That's a different story. Now, which basically I want to continue with more of a global outlook, right? Again, being a prominent VC firm in the space, like you've invested in great projects that are they're like right now spearheading the entire evolution of the DeFi space as well, and also combining all the layers. I tend to name them still different layers. What do you think with COVID, with I would say global pandemic and the entire recession, global recession, what would be the role of digital assets in the future?
It's super interesting, right? So, obviously there were a lot of people expecting that okay, if we hit a real disaster scenario, like we saw in March when COVID really hit markets, as markets finally digested the fact that we're going to have extended periods of lockdown, this is going to have serious economic side effects. I think there were a lot of people expecting that, Bitcoin in particular, crypto more broadly, would be able to trade upward. And obviously I think, that hope is misplaced. Right? I mean, even so-called safe haven assets sold off drastically, right? So gold sold off, treasuries sold off. So all of the things that are supposed to be the safest in that environment, when there's a rush to cash, when people just need cash, it means they have to sell everything. So even if, they believe that, gold can be resilient or Bitcoin can be resilient in such an environment, when you need to raise cash, it doesn't really matter anymore, right? So I think more broadly, the space can recover from these kind of setbacks faster. But I think that we're probably in early innings of actually watching that play out.
But do you think stable coins and I would say national digital currencies, I know about 16 countries right now digitizing their national currencies, and it's going to be pegged 1-to-1 to their national currency, or sometimes even a combination of, dollar and their national currency, which is quite fascinating to also mitigate the inflation from different economical theories. Do you think that might be potentially the future and somehow preserving the value of the currency, where in situation with Venezuela when they hyperinflation was 800% or something, right? So do you think that's one of the solutions that we might present as an industry?
I think it could be. I think that the biggest way that the industry kind of impacts something like that is actually just by providing some level of competition and alternative to people. That's one of the things I love most is if people have access to an alternative, it actually makes, in theory, if we play that out, it should make governments and central banks a little bit more responsible with their currency so that we avoid a Venezuela situation right? When you have a population that has very few alternatives, it's very easy to go down that road. When those people have other alternatives, it creates competition. It should lead to more prudence. Whether it will or not, I'm not sure. But that's one of the interesting angles I find about CBDC. And in general, just people, I could see countries using it on almost an offensive kind of. So, if I can make my currency more, clearly there's, for example, if you use the US dollar, there's huge demand for the dollar abroad. A lot of times it's actually hard to get dollar access. If you can actually open up a dollar equivalent and get a smartphone, now you've stopped sometimes there's actually literally a constraint in terms of being able to move physical dollars into a country. Now you've kind of routed around that. So I think accessibility is really interesting. I think, providing some level of balance or competition or alternative will also lead to favorable outcomes. But I don't think that these things will displace fiat currencies. I think fiat currencies are useful to a lot of people. But hopefully overall the net benefit, I think, will certainly be positive.
No, I agree your positivity, right? And ironically, I've read recently the report of by Chainalysis, and they disclosed that one of the most active participants in the entire world, it's actually like Russia, Ukraine, Venezuela, and all the other countries, which, again, I understand why it's happening, but it's just also interesting. So United States is number 8. It's not even top 5, right? Yeah. So even though the major investors are coming from the United States and China.
Yes. I found that fascinating too. And it was funny because when I saw it released, because I think that was actually, as we're recording this, it was just the day before. But the way that it was attributed to those countries was, okay, these are countries that tend to be a little bit more familiar with digital currencies and a little bit more tech inclined. And to me, when I look at the list, I saw the same thing that you did, which was, wait a minute, these are mostly countries that have dysfunctional currencies and or are subject to sanctions and therefore need some alternative in order to be able to transact on a global marketplace. So I thought that was pretty interesting.
Yeah, so I think those are alternatives that will appear more and more. And obviously, we're still talking about technology. It can be used for the good purposes, or the bad purposes, right? It's always those stories. So we're here just to educate people and to make sure they're using it for the good cause, right? So, yes. And coming back to, again, your history, I'm sure being in the space for so long, I'm sure you have some of the comics, some of the funny or more probably inspirational stories. So can you share one of the most funny, either a funny moment that you've experienced that was really, really outstanding and just ingrained in your memory, or something that was purely inspirational, maybe one of your investment companies?
Oh man, there's been a lot of inspirational moments. I don't know if any of them would come across as well with a quick soundbite, but working with the founders a lot of times, venture is very much held up as oh, it's glorious working with these startups, but in reality, when you're spending the most time usually with a company you've invested in, it's usually when they're going through hard times, and so it's usually having tough conversations, founder divorces, any other number kind of issues that come up. So it's been inspiring watching a lot of founders build through those kind of environments, watching them build through bear markets, watching them build through, random internal dysfunction, whatever it might be. So to me, that was, watching the resilience has certainly been inspiring. In terms of other stories, trying to think of something funny. I mean, certainly, one thing that's always stood out in my mind was the environment in 2017 at CoinDesk Consensus Conference, where, it was just astounding to me looking around and just the level of euphoria and enthusiasm, and it was truly shocking. It was definitely, there's these times in the market when, certainly the dynamic between the companies that we're looking to invest in and us as investors can shift very quickly, right? Typically, you might have a company come in and say, hey, we would love it if you would invest in us. And then sometimes, and especially in those hot market environments, it turns the other way where you're going, please let me invest in you, right? So that's always been a funny dynamic to me. And maybe one other thing that I'd leave you with is going back to kind of 2015, maybe 2014, 2015, I think it would be, as I was really going deep on the space, was looking for anybody else that had, a good research background that really wanted to talk through things, because you get so excited about it, and it was hard to find other people that really wanted to discuss things on a serious level. And so at the time, we actually set up a recurring call, and it was between myself, Chris Berniski, Tour de Meester, and Bobby Cho, now formerly of Cumberland, now over at CMS. So it's funny because we've all kind of gone our various routes in the industry, and Chris has done a great job placeholder. Tour's done a great job as a Bitcoin researcher and did a great job with Adam. And Bobby has obviously moved on from Cumberland and built CMS Holdings. So it's just funny because at the time, the only people that were thinking, or the only people I could find that really wanted to talk about these things deeply analytically, and great to still be in touch with them in the industry years later.
Yeah, I'm sure. Listen, it's I think the people who are longer, I would say survivors, who stayed longer in the industry, like, they went through crypto winter in 2018, like they went through multiple like scam stories and other like unpleasant situations. I think those people actually, they value like genuine like relationship. They realize that like it's not, we're not talking about like thousands of different companies, like we're talking about probably hundreds, like that's all, like and it's easier of course than when it's a small community, everyone knows each other, right? So it's kind of easy to navigate. So one last thing I want to also ask your opinion about, like on my personal side, I'm also I'm researching a lot about critical thinking and how you can hack your your brain to become more, how it's efficient, to become the better version of yourself, right? If you were to suggest to our listeners, like what would be the #1 skill, or you can pick like top 3 skills, if someone is willing to get into the blockchain space, what would you like prioritize? How would you prioritize top 3 skills?
That's a good question. Let's see. Let me think of like one of them would be willing to put things out in a public space. I think that's probably, again, kind of going back to actually my experience doing sell-side equity research, which certainly provided a lot of critical feedback for me, which I found super helpful. And I think today's crypto environment that exists more on Twitter, on Medium, and Telegram. And I think really being able to put forth, thoughtful, coherent analyses on these things, and letting people battle test them, let people poke holes in them. That's only going to make you stronger. So I think that's one. I think another one, like this applies to just investing broadly, not even specific to crypto. And to me, really I think is helpful for life in general, is just always being able to appreciate the other side of a trade. Now, sometimes this might literally be a trade. It might literally be an investment. And sometimes it's just understanding different viewpoints. And one of the most important things if you're ever investing is thinking about, if you can't understand why why someone else has the opposite thesis, then you're not doing yourself any favors. Like you need to develop a healthy appreciation for why you might be wrong, and not just say this is obvious that things are going to play out a certain XYZ. Because if you're buying an asset, someone is selling it to you, and they have their own thesis. And it's easy to just dismiss the other side as less intelligent. But usually that's not the case. There's usually someone very intelligent on the other side of that. And so keeping that in mind, respecting that and saying, okay, they're going the exact opposite direction. Why are they doing that? And can I develop a healthy appreciation for it? I think is really helpful. And then I'd say the last thing is just being able to evolve quickly. So, there's a classic thing in venture of strong views weakly held. And so it's okay to, again, have strong views, but you need to be ready to change your position. I think that's most important with anything investing related. It's not about being right all the time, but it's about recognizing when you're wrong and changing positions. And I think that's just super critical. And it's really just generally helpful for keeping an open mind in life, right? Like, okay, fine, I had this view, I'm getting conflicting data, I need to take that in and I need to adjust accordingly, because otherwise I'm only going to make the pain deeper and deeper.
No, that's a great, I would say top 3, amazing. So maybe you can also, like, the last thing I would ask you, like, maybe you can suggest a book like that really, like, you would help to develop those skills, like, or like, at least one of them.
It's a good question. So usually people have like great book references. I have a few that I've really enjoyed. I'm not sure how many of them would be super helpful, but one that does come to mind is actually a really short book that's really easy to read that I think is really pleasant. And if people especially maybe don't have a big background in economics, or even if they do, like, because actually my degree's in economics, but it's something that I love to reread, is actually a really small book that's really not popular called Economic Sophisms by Frederick Bastiat. And it just goes through in very plain language. This is not a deep, lots of economic terms that, the average person can't understand. It walks through like very plain examples that I think anybody can kind of interpret. And it's, when I read it today, it seems extremely, extremely timely. But I think the book was written in 1800s, maybe, I'm not sure, a really long time ago. And so it's just fascinating to see that we still have the same kind of economic discussions today. And when I read some of this, like, oh my gosh, it's so unequivocally settled in such a plain language way that anybody can understand. I would highly recommend it.
Perfect. Now, I honestly, I haven't read it, so I will do it. I'll post my recommendations also of the book, and obviously I'll post a link in our description. But Spencer, I know like we're both in this world where it's dynamic, and the Zoom requires you to have multiple conferences a call. So like, as much as I'd love like to talk more with you, I know that you have to run, I have to run. So really appreciate the interview. Like, it was fascinating to get into the to the mind of one of the the greatest VC investors, and know personally your story. Really enjoyed your advices, and I hope our listeners also is going to post some comments. And I hope we're going to see you in San Francisco. I'm in New York. I hope to see you at some point.
Yeah, absolutely. I really enjoyed the conversation, and really humbled to say one of the best investors in the space. We'll see. It's a long game, and I think we have a couple decades of building left yet. So we'll watch it all play out, and it's going to be a good time.
Well, I wish you success anyhow. Yeah. Thank you so much.
Thanks so much.